very good. You didn't even laugh at that, Charlie. Okay, well, we're with the music going. We know we're live, so now we just need to find us on X and retweet that. There we go. That is a loud blue jay. All righty. Well, good morning, everybody. Now that is reposted, we can begin. Today is the 17th of August. It's a Monday. Everything is a little bit slower on a Monday, including
me.
I was just going to say, including Charlie and myself. But the market still goes, still opens at 9:30 and still goes on. So let's talk about some stocks, Charlie. I have some stuff about healthcare, a lot of news going on. I don't know, there's a lot of news coming this week. What are you looking at? I know housing data is coming. What should we look for in the housing data that tells us that things are good, things are bad? And what's the best way to play it? Or is it housing stocks or is it banks?
Well, I guess, let me just start with what's coming this week. So we just had the National Association of Homebuilders Sentiment Index that came out. I'll come back to that. We've got the housing starts tomorrow, and then the mortgage purchase index on Wednesday. And then we also have Toll Brothers earnings and Home Depot's earnings this week. So there's a smattering of different ways of looking at housing. I've generally, literally since September of 24, have been negative on the home builders. They've had actually a nice pop here over the summer. And I'm not really sure why. There's been talk that Trump wants to reduce capital gains taxes on home sales as a way of spurring turnover. But that would be, more positive for the brokers than I think the home builders, although it could increase sales. There's expectations that maybe the long end of the curve can come down, although we haven't really seen that, which would make financing homes more available. But a lot of these home builders, stocks have been pretty washed out. I mean, I suspect they're underowned. But my guess is that the rally that we've seen this summer in these stocks is more of a rotation trade than anything fundamentally improving. So I'm still avoiding them and probably not going to look at them positively until maybe next spring at the earliest. But let me just mention, the NAHB, which is the sentiment index for home builders, just came out at 10 o'clock this morning, came in at 35, up 1 point from last month of July at 34. Just to put that in perspective, those are levels that we saw pre-housing crisis in 2007, 2008. So it does not suggest a very strong positive sentiment out of the home builders. The three things that I focus on, when I see this release is, price cuts, because the key issue is what's happening to orders for the home builders and what's happening to margins for the home builders. And, 35% of the home builders are still acknowledging that they're having to cut prices in August, but that is down from 37%. I mean, it's a slight improvement. The average price reduction was about 6%, and that's unchanged for quite a few months now. And then the use of sales incentives, is such things as mortgage buy downs, was at 63%, and that's been constant for quite a few months now. So we're really not seeing any significant improvement in the home builders. So I still think it's a group to avoid, but looking maybe sometime next year to see if there's an opportunity to pick these things up more cheaply. Toll Brothers is on Tuesday. I'll be interested to see if the high end still is holding up. That's important because the wealth effect from residential real estate and from stock prices is what's keeping consumption going. And my data shows that the wealth effect from real estate, residential real estate, has stopped improving. In other words, you're not creating any more wealth effect from real estate. And so it'll be interesting to see if the top end still is improving. So that's really, it on the home front. If you want to talk a little bit about your group, I can then.
No, I mean, it sounds like the data that came out is kind of where it was before. So if you really wanted to look for something positive, it's that 1 or 2 point increase in sentiment, but it's really still not great. So is that a fair statement?
You could say it's not getting worse, and if we get some positive relief on the rate front, or if Trump is able to push through some sort of relief on capital gains, maybe that helps, but I just don't see it right now.
Yeah, it's interesting. A few of them are down quite a bit today. Toll Brothers down, and I hate looking at the first half hour of one day of a market to kind of see it. But it's weird when the market's not down as much as an individual group, right? Because you see Pulte's down more than the market, Zillow's down more than the market, Toll Brothers down more than the market. It's something's going on there, but maybe everyone's afraid of earnings ahead of that, just kind of lightening up.
Yeah, I mean, I Toll Brothers has had the better dynamics or metrics, fundamental metrics. So we'll see if they can continue this. But I just don't understand the summer rally other than positioning and rotation into laggards, and we've seen that a lot, a rotation into laggards.
Yeah. I think, the rotation idea is really strong, because once you saw that shakeout in tech, it's come back really strong, but that shakeout was weird because it kind of, it definitely helped the biotech sector a lot. And the idea that we might not raise rates has helped the sector a lot, because of these long duration assets. So that's actually interesting. But we've seen M&A like you've never seen before in biotech and in healthcare. Just today alone, Argenx acquires Forte Biosciences, $2.2 billion cash acquisition. That used to make big headlines when you spend $2 billion. Now it's like nothing. J&J announced they're doing a $3.5 billion deal with Sale Biosciences. Tarsus, a little company, pretty interesting company. They make, I won't get into it, but there's a really interesting little company, but they're acquiring someone for $800 million to build out their pipeline. And that's just today. That's so far today. So AstraZeneca they terminated a phase 3 study. So another setback. Remember last week or 2 weeks ago, there was the rumor that they were going to buy Bristol Myers, and AstraZeneca promptly dropped like 12%, and Bristol Myers barely went up because everyone knew like that deal's not going to happen. Well, now we're starting to get a sense of why AstraZeneca, one of their key pipeline drugs, just got pulled. So lots of news in the healthcare area. This is one of the weeks where I'm actually not doing a lot. This is strange because whether the market's up or down, I'm usually doing something, kind of repositioning or finding something new. But right now, I'm just trying to see if there's anything that I've done differently or added to in the last little bit. I am a little concerned about Halion. Let me just relog into this because one of my interns, I asked them to look into their disclosure from this last quarter on their conference call and what they said versus the sequentially earlier quarter, so from the first quarter to the second quarter, and sends me back a chart. I don't need to read it that closely because I said just color code red or green, things that are incrementally better, incrementally worse. And sure enough, things that were like, hey, we're not seeing any problem, any softness in Europe yet, has turned into we're starting to see softness here. We haven't seen any input cost problems yet to yes, we're starting to see it. So for a very, what I think is a fantastic company, this is HLN makes Tums and a whole bunch of like consumer staple kind of products that you have in your cabinet that you're going to buy good economy or bad, I think. Those aren't high margin. That's not a high margin business. It's not like a pharma company. And so when you start to have these little small changes, they worry me. I haven't done anything in it. They put up a not so great quarter this last quarter. So I mean, everything's telling me what I should do. I just haven't done it yet. Because I do want to own things that do better in a down market, and Hallian's one of them. And I do like management. Management's just I've met them a few times, and they're really solid. I'm just trying to see if there's anything else that I've done.
David,
Yep.
This may not be a fair question, but as you know, every once in a while I dabble in your space, and I have no idea what I'm doing there. But I've got friends that help me. They're all involved in the medical field. So Gilead Sciences, GILD, I was told to take a look at that. Are you hearing anything that would suggest their pipeline has got something coming forth?
Yeah, I'm not close to them, so I don't know. That one's I hate saying when I don't know things, but when I don't know things, I don't know them. So
yeah, no, it's important to say that.
I can tell you a funny story of how they insulted me.
Okay.
So Gilead obviously is gigantic in the anti-HIV area, and I said to them in a meeting, what happens if there's a vaccine or a cure to AIDS? And the CEO just laughed, just laughed. And I, to me, it's a serious question. It's a good question. It's an existential type question for a company. And he goes, that just, I mean, it's just not going to happen. And I was like, okay, well, I didn't ask you, give me the probabilities that it was going to happen. And so maybe that's the reason I don't look into them that much, because I kind of I have a bias that will probably forever taint it. But so far he's been right. There hasn't been a cure. So I guess, I should have not been so offended that he didn't like my question, and should have taken it at the point of, wow, this is a cash flow machine. This is so, but that's just a side story. I'm not up to date on them, so I don't know what their pipeline looks like.
All right. Well, let's leave it alone then, because I'm certainly not qualified to talk about it.
Yeah, well, one of let's see. Well, that doesn't stop any of us, right? When
I buy a lot of stocks in your sector, and I've done well. So,
well, the one that's actually there's one that's actually up a lot today. There's no big reason for it other than 4D Molecular. So I'll just bring it up in case people are wondering. 4D Molecular is the one FDMT that makes the age-related macular degeneration drug. Or they hope to. It's in development. That's up 60% since I mentioned it on here just 6 months ago or so, maybe 9 months ago. I really like it. I haven't sold a share. I bought more shares, not recently, but I bought more shares during that time. If their drug works, it's going to be, this is a multi-bagger, because, this is a small biotech company that is rolling the dice on this. So this is I think it's a really good one, but if it doesn't work, you're down 80%, maybe to zero eventually. But if they don't have a way to fix their balance sheet, if it doesn't work, then they'll just bleed out. So in other words, know your risk. I might like it. You might not be fit for anybody else, but but yeah, I haven't really done anything else this last week, and I'm kind of sitting. I did buy a little more Viatris, VTRS generic company, again trying to get ready for the downturns. Um, when and if the market starts to go down, generic companies, staples companies, things like that are probably better than having risky biotech names. But that's it for us today. Anything else for you,
Wait.
Charlie?
I'm
Sure.
going to talk about ag.
Oh yeah. I forgot about that. You wanted to talk
Um,
about it's like ag, potash, and other types of companies we don't really talk about that often. So what are you looking at there?
Yeah, I had actually had a nice run with these last year, and I'm then got out, and now I'm looking to get back in. But I wanted to pick up on something you said. You mentioned the tech bounce has been quite spectacular, and it has. But when you're down 50% and then you're up 50% off of that bottom, you're still down from So the tech to me bounce is a dead cat bounce, but it is the initial sell off has caused this rotation. And your sector, my sector, banks have benefited from that rotation. But one of the sectors that I think is poised to benefit, and I think is independent of the market overall, is the ag sector. And so I've been starting to nibble, and I emphasize nibble there. Some of the things that I'm looking at, the generic index, VanEck agricultural index is called MOO, MOO. I would, if you want to be diversified, I would buy that. CF Industries, symbol CF, Archer-Daniels-Midland, ADM, Intrepid Potash, IPI, Nutrien, NTR. Those are all names that I'm looking at. I haven't, I've been sort of have Deere, DE on my watch list. They report earnings later this week. But I think they're more end of cycle than beginning of cycle if we do have a rotation into ag names. But here's the general thesis, and that's I'm a generalist. I'm not an expert in this area, but I think there are three things that are driving potentially the ag sector. One is geopolitics. We've obviously had wars in Ukraine, Russia, disruptions, ports being, ports being blown up. And so that has, the Strait of Hormuz being shut down, that's deterred, supplies on a worldwide basis. The second factor, and this is much more unpredictable, is the weather, whether it's El Nino or droughts, that can affect, your crop production. And then the third one, which I think is the most important one, is that we've had these crop reports, both from WASDE last week, WASDE being the World Agricultural Supply and Demand Estimates, and tonight, I think after the close, from the USDA on domestic crop supplies and production and plantings. And they're showing, that basically we have lower supplies, higher exports, and smaller ending stocks in the grains. And we've also seen, so that is very supportive of higher prices in the grains. And we've also seen higher prices in the softs, whether that be coffee or cotton or sugar or cocoa. I think higher crop prices as a theme is going to emerge more and more here in the second half. Obviously, if you're a farmer, you want your crop prices to rise faster than your input costs, things like fertilizer. And so far that is starting to emerge. So I think the firmer, the first thing I would mention is the firmer crop prices allows farmers to rationalize spending on more on fertilizer and seed and chemicals, and eventually, this is the end of the cycle, machinery like Deere. So I think that's the first thing, is that you're getting firmer crop prices. The second thing is that biofuels have become bigger in demand, and that's partly because of the 2006, 2007, renewable fuel standard volume obligations that were passed recently, and so that has allowed an organization like Archer-Daniels-Midland to see improved soybean crushing and ethanol margins. They recently raised their 2006 earnings forecast from a range of 415 to 470 up to 515 to 560 because of improved margins, and that's largely related to these biofuel demands. Think of it this way: the transmission mechanism. Higher biofuel demand means more corn or soybean consumption, which means tighter inventories, which means higher crop prices, better farmer economics, and then they can go out and buy more fertilizer and equipment spend. So that's sort of the transmission mechanism. The third theme is, fertilizer prices have remained fairly firm and potentially improving. Global nitrogen market is very tight. Obviously, that's exacerbated by the Middle East conflict and the shutdown of the Strait of Hormuz. I think it's something like 35 or 40% of global trade for urea passes through the Strait of Hormuz. So if you got trade flow disruptions, you have production outages, you have elevated energy prices, strong import demand from Brazil and India. That's going to be positive for fertilizer. So Intrepid Potash or Nutrien would be plays on that. The fourth theme is the government support that the farmers have gotten from the Trump administration. As you know, they're a very important vote for Trump, and he's been able to bridge some of the downturn and weakness that farmers have experienced in the last year. I think payments to farmers this year are going to be around $44 billion, and that's up from 13 billion last year, 14 billion last year. So that's helping as well. And then, at the end of the cycle is if all of this works, is the farmer going out and buying equipment, which would help Deere. I'm not playing Deere right now, but I'm going to be interested in what they report this Thursday, I think. So the bottom line is, if you look out towards 27, 28, you got higher crop prices, you got government support, you got lower financing costs, you got replacement needs. And so I think you've got an ag cycle that's going to be very bullish over the next 12 to 24 months. So I'm looking at MOO as the play on the ETF. MOO is the ETF that you want to own.
And maybe BG and ADM if you're more adventurous.
Yeah, Bunge is another name. BG is a good name. Archer-Daniels-Midland is a good name. CF Industries.
All right. Well, I'm going to take. Actually, that's what I was writing down and typing away, looking into it. While I always like to be able to answer on a stock that I own, at least, how do they make money, and if prices go higher, do they make more or less, and for how long? So I like to try to start at the basics, and I guess both of them do make more money as there are dislocations. So
yeah, I mean, and as I said, the key is that crop prices rise faster than input costs, and fertilizer is one of your input costs. Yeah.
All right, well, let's end it there. We're at a half hour, and it's the 17th. It's a Monday. Let's get started on the week. And thanks, Charlie, on behalf of Charlie and myself. If you're interested in more information, just go to wallstreetbeats.com, see our subscriptions. You get more detail, get access to each one of our pros, and or go to passes/wallstreetbeats and get pretty much the same thing, but in a much fancier package. Thanks, everybody. Have a great week. See you next time.
Thanks, David. Thanks, Jen.